Stock prices have been dropping really fast. It's pretty scary at times how quickly stocks could really get punished and investors lose money very quickly. In this video, I wanted to cover the stocks that I would be selling. If these stocks were in my portfolio, I would think about selling them out of my portfolio. The reasons for it, I'll explain on each stock. Now, the reason why stocks are dropping so much is we've had a couple of years of just great appreciation on stocks. But now we face some pretty big challenges in 2025. The economy is slowing down. The tariffs that are being imposed are going to slow things down. If anything, just cause all businesses to pause and maybe not spend that extra capital, maybe not start that project, maybe not think about expanding too much because what if the tariffs really hurt their business? So there's a lot of concern out there. Let me go through and explain the stocks that I think I would be selling out of my portfolio if I had them, and the reasons for it, I'll explain on each stock. Apple would be one of the first stocks that I would sell. The stock has done great over 5 years, and it's held by so many super investors. But I think the future business plan for them is pretty weak and filled with a lot of risk items. Most of their revenues derive from that iPhone, and the iPhone sales have plateaued. If anything, they're decreasing. Their competitors continue to get stronger and come out with really impressive devices. So Apple may really struggle to generate more revenue, is my concern with Apple. If we look at the year to date for Apple, the stock has really come down 12%. Man, that's a big haircut on Apple. I think it's going to continue on because when I look at the intrinsic value of Apple stock, which is the value of all future free cash flows from this company, it is well below their current stock price. Let me show you. Now, the cash flows that Apple produces is what's made it the most valuable company on the stock market. And those cash flows, I still think could grow. Now, if their revenue continues to contract, I don't know if that's going to be the case. But this is the best case forecast that I'm putting out there for Apple. That is, that they'll grow from $100 billion of free cash flow up to 119 billion in 4 years. All those cash flows collectively are worth 2.2 trillion dollars. And when I add cash, take away debt, it has a 31% premium. The cash flows are worth 31% less than their current stock price. That's why I would be selling Apple stock. The next stock on my sell list would be Crowdstrike. This is a popular stock among many retail investors, even some super investors. But I think this stock is trading at a very high premium based on the free cash flows I expect. The Crowdstrike business, they are a cybersecurity company creating software for that space. And I see other opportunities in the same space that are better than Crowdstrike, which is one of the reasons why I would sell Crowdstrike. I think they're overpriced and they have plenty of competition. They've had a really rough chart. If you look at their stock, they really had a big problem middle of 2024 when they caused a huge outage. And more recently, the stock's really sold off. When I compare the free cash flows I expect from CrowdStrike in the future to today's stock price, the future cash flows are 56% less valuable than the current stock price. So that's a big difference in the intrinsic value of CrowdStrike versus their stock price. Part of it is that investors are voting for CrowdStrike. In the near term, the stock market is a voting machine. The popular stock gets bought. And over the long term, it's a weighing machine. Those cash flows will be weighed over the long haul. And I believe that CrowdStrike is going to go down in stock price because their cash flows just cannot support the very high stock price. Tesla's next on the list, and Tesla has a car business. A lot of people feel that they're a technology business. I'm of the thought that they are a car business. Having said that, they have a lot of competitors, especially the competitors coming out of China with impressive electric vehicles. Having said that, the stock has really been a tale of two stories. The first story being that when Trump was elected, this stock really flourished because Elon Musk was in partnership, I guess, with the president that is in office. But ever since then, the stock has really collapsed 48%. And I think it's going to continue to collapse. Again, it's based on the fact that the value of Tesla should be on the future free cash flows. And the best data we have today is that we have contracting sales. People are avoiding buying Teslas for whatever reason, but sales have declined substantially. They don't make a lot of money on those cars, and the free cash flows are not very good. Let me show you. The free cash flows from Tesla are 85% less valuable than the current stock price. That is a big difference. But really, the car business just, they don't make a lot of money. The margins are very low. The free cash left after you sell those cars is very low. So the best I could do is give them a valuation that is only 15% of the current stock price, which is why I would be selling stock, Tesla stock, out of my portfolio. Broadcom would be the next one on the list of stocks that I would sell. And again, it's that the cash flows that Broadcom's going to produce are nowhere near the value of the current stock price. Broadcom benefited from the big data center build out and literally rode the coattails of NVIDIA. But what people may not understand is you see an increase in revenue in their financials, but most of that revenue growth was an acquisition of VMware. Now that acquisition makes the financials look good, but I don't know that it's as good as organic growth. Organic growth is the best type of growth. It really shows that a business has great products that customers really want and are willing to pay more for those products. In the case of Broadcom, I think they were in the right place at the right time, but now their stock, in my opinion, is priced too high. When I weigh the future cash flows of Broadcom, I get to a certain valuation that's well below their current market cap and stock price. In fact, the value of those free cash flows are 50% less than their current stock price. And that's the principal reason why I would be selling Broadcom stock. And the last stock on my list of stocks that I would sell is DoorDash. This has been a really successful company. The stock price has done really well. But there's a couple of reasons why I would be selling this stock. First is it's overpriced, and I'll show that to you in 1 minute. Second, as we go into a recessionary period, I think consumers are going to watch what they spend. And the DoorDash fees, along with restaurant food, really adds up quickly and really drains budgets at home. So I think the DoorDash customer is going to pull back on spend. The growth of new customers is also going to be limited. I think they're going to be hard pressed to find new users of DoorDash. The market has certainly pulled back in 2025, and I'm not quite sure if it's done selling off stocks, especially the stocks that were priced really high. The rest of 2025 is uncertain. Are we going into a recession? Will these tariffs really hurt the economy and hurt businesses that are trying to grow? So those are the things that are weighing on my mind, and I'm sure are on the minds of other investors. That was my list of stocks that I would be selling. And just keep in mind, I'm just one investor sharing an opinion, a point of view. I'm not recommending you buy, hold, or sell any stock I ever cover, and I don't provide any financial advice. Thank you so much for watching. Good luck investing.